Over the past few months, my portfolio has gotten crushed as a result of the sell-off in tech and growth stocks in general. I know all the haters who commented on my video about quitting dividend investing are ready to jump in and say I told you so, but I'm not giving up yet. In fact, selling some of my stocks at a loss in this market environment has been a great tool that I expect to actually improve my future returns. So in this video, I'm going to tell you why I've actually been happy to sell stocks at a loss throughout the past few months. Well, I guess I'd prefer to sell stocks at a gain, but this is how I've been able to strengthen my expected returns while my stocks have been going down. My reasons for selling stocks at a loss includes things like doubling down on certain positions, managing margin, and securing some substantial tax benefits. In addition to my 3 personal reasons, I'll share 3 other scenarios when you might want to sell your stocks even if you're in the red. So let's get into it. The first reason I've been selling stocks at a loss is to double down elsewhere. This has been a combination of moving into stocks that are particularly beaten down, as well as moving heavier into my higher conviction stocks. For example, imagine I own 2 different stocks. One is down 10% and one is down 20%. However, I have a similar level of confidence in both investments. In this case, the stock that is down 20% may be a better opportunity because it's fallen a greater amount from my average purchase price. If I believe that both stocks will return to their previous prices, it makes sense to adjust my allocation to be heavier into the stock that suffered the bigger loss. So I would be happy to sell the first stock at a 10% loss and move that money into the stock that is down 20%. And like I said, this goes hand in hand with allocating more of my portfolio to my higher conviction stocks. I had a few growth stocks in my portfolio that I hadn't done a whole lot of research on, so I didn't feel confident holding them while growth was selling off. At the same time, I was watching some of my favorite stocks get crushed by the market. So I sold a handful of stocks that were down by just a few percent and concentrated that into some of my favorite stocks where I had even bigger losses. I'm expecting that this strategy will produce a greater rebound in my portfolio when growth stocks are back in favor in the market. Although I personally did this within my growth-focused portfolio, this is also something that might make sense across sectors or investment strategies. For example, the last few months saw a lot of selling of tech and growth stocks as investors moved into value-oriented investments that are typically safer for an inflationary period like many people are expecting. In this case, you would have done well selling these growth stocks at a loss and rotating into things like financials and energy. I personally wasn't comfortable doing this because I've been focused on these growth investments over the last few months, and I didn't want to risk missing out on any sort of rebound they saw. Plus, I'm not much of a trader and plan to hold these stocks for at least a few years anyway. But if you know when and where to move, that can be a great reason to sell a stock at a loss. The next reason I sold at a loss is to manage my margin. I just started using margin a few months ago, which in hindsight was pretty bad timing, but I've kept it fairly responsible at about 20% of my portfolio. This means that 20% of my portfolio is made up of borrowed money, or in other words, I'm borrowing 25 cents for every dollar I invest. I'm using margin in my Robinhood portfolio, which has different limits depending on how risky they deem your stocks to be. I held a few stocks and options contracts in my portfolio that had a 100% margin maintenance requirement. This meant that I was at a much higher risk of a margin call if my portfolio started losing value, because I needed a larger account balance to maintain eligibility for the margin I had used. So what I did was sell out of a few of these riskier or more volatile positions and move them into positions with lower margin requirements. This also went along with my goal of doubling down on other positions, because I was able to get out of positions I was less confident about while increasing my position in my higher conviction stocks. By doing this, I was able to avoid a margin call and maintain the flexibility to add more cash into the market when I wanted to, instead of when my margin balance required it. The third and biggest reason I was okay selling stocks at a loss was to secure the capital losses for doing so, which can be a really powerful tax strategy. I'll break it down. As you likely know, you have to pay capital gains taxes on any dividends or interest you earn throughout the year, as well as on any profits from selling stock. But you can cancel out any of these capital gains with capital losses. So if I had $1,000 of capital gains, I would owe about $150 in taxes at the long-term capital gains tax rate, which is the best case scenario. However, if I also had $1,000 of capital losses from selling stocks at a loss, for example, it would cancel out the $1,000 of capital gains and I would owe $0 in taxes. Furthermore, if you have more capital losses than capital gains, you can deduct up to $3,000 of additional capital losses from your income. Even better, if you somehow manage to accrue even more than $3,000 in net capital losses for a year, you can carry that capital loss into future tax years and continue using it to offset your capital gains and income. So even though the perfect scenario is just selling stocks at a profit and paying a little bit in taxes, there are a lot of ways to reduce your tax obligation by realizing some capital losses. I've personally been sitting on some unrealized long-term gains from cryptocurrency, but I've been putting off doing anything about it because I didn't want to pay any taxes yet. After realizing some capital losses in the stock market with my first 2 strategies, it gave me a great opportunity to secure some of my capital gains from cryptocurrency without owing taxes on them. I've been wanting to move some money from cryptocurrency into stocks anyway, so this was a great time to sell high in the crypto market and use that cash to buy low in the stock market. So those are the 3 personal reasons I've been selling stocks at a loss. But I've also got 3 more situations where selling stocks at a loss might make sense. One of these reasons is simply to limit your losses. If you have a low risk tolerance or plan on needing your investment portfolio for retirement, income, or anything else in the short term, you might not be able to hold on to a losing stock. In these cases, it may be responsible to identify a maximum loss that you're willing to sustain. This will protect you from falling into any sort of financial risk that you wouldn't be able to tolerate. While you could just keep an eye on the stock every day, the easiest way to do this is with a stop loss order. After you purchase the stock, you can set up a stop loss order that will automatically sell your position if the price reaches a certain point, whether you want to minimize your losses at 5%, 10%, or whatever it may be. This is something I'd like to incorporate more since the growth stocks I've been investing in tend to be more volatile. Had I been doing this lately, I would have been able to cut my losses in early stages of the market sell-off, then buy back into those same stocks at lower points. This is just not a decision I'm comfortable making in the moment, so creating stop losses ahead of time might be a better solution for me. Another reason to sell a stock at a loss is if something has changed, either with the stock itself or your own investing strategy. It's one thing to continue holding a stock that's dropped due to overall market sentiment or other external factors, but when something significant has changed with a specific business, it's a great time to reevaluate the stock. For example, if they're accumulating more debt, cutting a dividend, or pivoting their business to other areas, the stock may not represent the same goals that you envisioned for the company when you first purchased shares. I've personally gotten burned trying to hold stocks through bad news that never ended up recovering, purely because selling at a 10 or 15% loss seemed unattractive. But if these are serious issues that lead a stock to continue dropping towards 20 or 30% losses or more, it would be better to reevaluate in those initial stages and cut your losses if you no longer believe in the business or its value proposition. Similarly, if a stock no longer aligns with your investment strategy, it might not make sense to hold it. For example, last year, I started a dividend portfolio with the intention of creating passive income. However, I later realized that a growth strategy better aligned with my investment goals and decided to sell off all of my dividend stocks and funds to reallocate. Luckily, the market was booming back from the crash in March, so I didn't actually sell at a loss here. But that's a personal example of when selling made sense for my strategy. For better or for worse, I probably would have made the same decision even if my investments were down. For you, this might work the opposite. Maybe you no longer have the risk tolerance for speculative growth investments and want to shift to a more stable dividend portfolio to retire or earn passive income. In any case, it's important to continue adjusting your portfolio to fit your goals, and that might mean selling stocks at a loss. The last reason to sell stocks at a loss is if you simply need cash. In a perfect world, we'll never be put in a scenario where we're forced to sell our investments at a loss, which can be avoided by things like keeping an emergency fund and managing risk within your portfolio. However, there are a multitude of reasons why you might want to get access to extra cash, and I think in these situations, investors should be more comfortable with taking money out of their investment accounts. I have my retirement fund, which of course is exclusively for retirement and serves as my safety net, but I also invest in a standard taxable account that I want to be completely flexible with, in case I come across opportunities outside of stocks or in preparing for something big like buying a home or planning a vacation. After all, these are the kinds of things I'm putting money away and investing for in the first place. So I tend to think of my taxable investment account as a riskier, more exciting savings account that I can take cash out of if it ever becomes appropriate to do so. Obviously, I still view it as a long-term position that will hopefully grow over time, but it may also decrease over some time periods, and that's a risk I'm comfortable with. Even if I'm forced to cash out of some of my investments at a small loss, I believe that it's better that I invested that money in the first place, rather than spending it on something else that I would have never gotten cash back out of in the future. And that wraps up the 6 reasons I have for selling stocks at a loss, and how I've been thinking about selling stocks in general lately. I feel like with the diamond hands mentality that's permeated cryptocurrency and stock investing, the only advice you ever hear is to buy, and never sell. I think it's created an unhealthy stigma around selling any of your investments, which could be a potentially dangerous mindset to get into. So I wanted this video to be a reminder that there is a time not just to sell stocks, but to sell them at a loss. It's been refreshing for me to reconsider the selling side of things, and I hope you guys found some value in it as well. With that, I'd be interested to hear from you in the comments if you have any reasons for selling stocks at a loss that I didn't mention. Otherwise, I'll see you back here next week for another video.